Let's talk to Mr. Bismarck Rewane now, MD CEO of Financial Derivatives Company. Great to have you on the show, sir. Good morning, long time.
Good morning, thanks, Billy, and Happy New Month.
Happy New Month. Happy New Month.
I'm looking forward to a very interesting market today when now the U.S. markets are open.
Yeah, okay. And sir, I hope September is going to be bullish. I hope we're all going to make profit this month.
Yes. Why do I say that September is going to be bullish? There are three things that are happening. One, there is the price of Brent, which is our benchmark oil, benchmark blend of crude. It's up at almost $69 a barrel. Last month, the average price of Brent for the whole of August was $67.26. Today, you're trading at about almost $69. So we are good as far as the price is concerned. We're also good as far as the production is concerned. We are at our OPEC quota at 1.5 million barrels of crude and 200,000 barrels of condensate, which is good. I think that has to be taken into consideration. More interestingly, is that more interestingly, the fact that sorry, I'm just.
No, that's okay.
More interestingly is the fact that the price of PMS is down to 852 naira, and diesel is at 1,020. That is significantly lower than what it was 2 months ago, and that drives inflation. Finally, we are seeing cocoa. Cocoa prices up by almost 3% to about $7,700 on good weather in Ivory Coast, good weather in Nigeria, and good weather in Ghana. So I think that's the interesting element. We see most important development is the PMI, which was announced by IBTC, Stanbic, and S&P. It's gone to 54.2. This is a record high in terms of nine months of consecutive increases in the PMI, the Purchasing Managers Index. And why is it that people are buying inventory? There's a stable exchange rate, and people are also beginning to, consumers are beginning to increase their demand for commodities. So all told, when you look at the four factors I just discussed, one is the price of crude, which is higher than that of August. Two is the production of crude and condensates, which is at our OPEC quota. Three is the fact that Dangote has brought down the price of petrol now and diesel to 1020. And finally, that the PMI, which is the Purchasing Manager Index, which is a leading indicator, tells you that we are likely to see a positive September, all things being equal.
All right, let's definitely looking forward to some have called it maybe a mini Dettier this September. We'll see if that plays out. But looking deeper into this PMI, are there any signs that the manufacturing industry in Nigeria did get some kind of break in August?
Yes, the truth is that one, we had harvests, and therefore the prices. When we get to the commodity prices, we'll see everything except for tomatoes, every other thing stayed flat or reduced. So what has happened is that investors who saw a flat and appreciating naira delayed their purchases until sometime in August. So they are now beginning to buy inventory, order inventory from overseas. And the average time between when you order inventory and when you get it is about 90 to 100 days. So we are beginning to see that clearly happen. So I think that if you look at the PMI, it has inventory, it has employment, it has output, and it has manufacturing data. So all of these things point to the fact that we are now beginning to see some stability. So it's not just September is an inflection point, but also we are building up towards what we can call the DDD, which is Dirty December, which is going to be very, very attractive and impressive this year.
Mr. Ron, it's quite interesting. I did, see some stories earlier, and everyone is anticipating this December. I just hope we don't jinx it at this point.
I don't think we'll close it. I think this December is going to be very interesting. It's going to be much more aggressive and impressive than last December. So if last December was a dirty December, this year, like I said, it's the 3Ds. It's a dirty December. The Financial Times yesterday had a special on five restaurants that are going to be very, which are leading in Nigeria. And those five restaurants are in Lagos. So one of them RSVP, the other one, I can't remember. There was one in Abstract Ikoyi and some other ones. But it's quite impressive that the FT is leading and championing the thrust for Nigeria and Lagos in particular for this December. So we look forward to this December. But before we go there, I want us to stop and look at the inflation numbers that are going to come out on the 15th of this month, which is in about 12 days or so from now, or 13 days from now.
Yeah, we're definitely looking out for that number.
Can you hear me?
Yeah, I can hear you, sir.
The projections are that inflation would actually moderate by about 21.46 or something. And if that happens, and the central bank MPC meets and brings down interest rates marginally by about 25 basis points, we should then begin to see much more momentum in the economy as we go into the last quarter of the year.
All right, Mr. Ronnie, let's circle back to this PMI data now. Could this improvement signal, stronger GDP growth in Q3 2025?
Yes. As a matter of fact, Q1 we had about 31.1. We are now seeing most projections, including that of the IMF and the World Bank and the EIU. We are now looking at maybe for the year, the average will be about 3.5%. If we come out at 3.5% for the year, we would have outperformed sub-Saharan Africa, all right? We would have outperformed the global growth rate. So it means that the recovery is beginning to pick up some momentum, however, very mild. But the problem is not just about growth, it's about welfare. It's about institutional reform to ensure that the benefits of this growth can filter through and reach all angles and nooks and corners of Nigeria. In other words, the GDP per head will go from around $900 to about $1,010 for the year. Also, the level of multidimensional poverty should reduce, and also we should have a stronger impact of the fiscal deficit dropping below 5%. If not for some of those changes, fiscal deficit as a percentage of GDP would have gone as high as 6 or 7%, but now we are seeing it at about 4.3%. So your GDP growth goes to 3.5% for the year. Your inflation moderates to about almost 21%, and then you also begin to see that your debt service burden begins to reduce. If all of those things happen, 2026 may be a slightly better year than 2025, and definitely better than 2024.
All right. So, is this a bullish signal for the stock market? Because definitely we're kicking off September on the back foot. We see the bears dominating proceedings yesterday.
Yes. The reality is that there are technical factors and fundamental factors. I don't see the market crashing. I think the fact that the bears came out in early September or first day of September means nothing. As a matter of fact, we think that will continue maybe for another day or two. But the reality is that the stock market is a reflection of earnings. When you look at all those companies that declared losses last year, right? Almost all of them, without exception, are going to be declaring profits. You take MTN, you take Como, you take Presco, you take Guinness, you take Nigerian breweries, almost all those companies that declared losses because of FX losses and the 70% devaluation of the currency are now begin to see what I call forex gains coming in. And therefore, if that is the case, and you see a massive increase in their revenue as well as their profits, I think the the stock market will begin to reflect this. But it is not a very broad earnings surge. We are seeing it mainly the big companies, the major top 10 capitalized companies. So you have Dangote Cement, you have, like I mentioned earlier, you had Guinness, you had Nigerian breweries, you had MTN, you have Airtel, you have Presco, you have Okomu, across the board, fast-moving consumer goods, building materials, services, telcos, and also manufacturing. So it's going to be a good quarter as far as the stock market is concerned.
And, definitely a stellar performance from the insurance index in August, about 44%. Do you see that continuing in September, or has that insurance rally fizzled away?
I think the insurance rally may continue, but I don't think it's going to be as rapid or as aggressive as we've seen it in the past. But don't forget, the insurance sector has always been performing suboptimally. We are now beginning to see it because of the insurance general, first and foremost, they increase the capital requirements. And as asset values begin to increase because of the devaluation of the currency, you need to insure, because in any loss you sustain now, without the insurance, you're going to be wiped out. So if you bought a car for, say, 10 million naira a year ago, 15 million naira a year ago, and now it's stolen and it's not insured, you can imagine what is going to happen to that person. So the insurance sector continues to grow because asset values are growing. The insurance sector continues to grow because insurance is a savings product. And the insurance sector continues to grow because the risk of loss is very high and the impact of a loss is quite significant as far as the assured is concerned. And don't forget, you have the life assurance products, you have the non-life insurance product, you have the general insurance products.
Oil starting off quite strong. Gold, that's hit about $3,500 per ounce, above that, also starting off strong. What are we seeing here? What's this indicating?
Well, I think first and foremost, we want to understand the inverse relationship between the dollar and gold. Gold has it's crossed $3,500 per ounce now. And once there's uncertainty as to the value of the dollar because of the interest rates and the question of the independence of the Federal Reserve Bank, investors are scrambling for gold, scrambling for precious metals, and because of that, the BRICS are now beginning to have alternative payment systems. As a matter of fact, I think it's Kenya today that has agreed to settle and move most of their transactions into Indian rupees and Chinese yuan, so that to diversify their portfolio. So the dollar remains the preeminent currency in the world, but I think the dominance of the dollar in global trade and all of that will be marginally affected because of the fact that the Federal Reserve Bank is under a lot of pressure at this point in time. So if we fast forward after the 7th of September, or I think, yes, there'll be an OPEC meeting on the 7th of September. There'll be an Open Market Committee or Federal Reserve Bank Committee meeting also early in September. And you go forward to the fact that the Nigerian MPC meeting will take place, I think, on the 20th or 21st of September. All of these things mean something that, one, the dollar might depreciate in value, the price of oil may increase, and more than anything else, the Nigerian economy will begin to, the 25 basis point expectation that we expect, that we are looking forward to at the MPC meeting, may make the impact of debt service on Nigerian government it's slightly lower, but it's not going to change things dramatically. So we still expect the Naira to trade in the same range of 1520 to 1560, 1570. and we do not expect any major devaluation of the currency in the short term.
All right, fantastic. I guess that's, good news for, salary earners and manufacturers at this point. But we know OPEC, they've made some moves. They're planning an output hike of about 547,000 barrels per day. Do you see any impacts there?
I think I get that.
OPEC Plus, they're planning an output hike, I think about 547,000 barrels per day. Are you seeing any impact? Because we know the output hikes always dampen oil prices.
I think that if I heard you right, if there's been an increase in production, and that means, first and foremost, we have an increase in price. Secondly, we have an increase in production. So our Nigeria's oil revenues should be much stronger than what it is today. And that stability in our currency and export earnings will play into our currency, play into our balance of trade, and reflect in our gross reserves, which are now about $41.3 billion, which is quite impressive compared to where we were a year ago.
All right, thank you so much, Mr. Bismarck Rewane. Definitely be looking forward to that DDD for this December. Looking forward to it.
D cubed.
D cubed.
D times D.
Fantastic.
Thank you.
Fantastic. Thank you so much, sir.